Alright, so recording now, guys. This is for everyone who has been saying that your ITM has dropped from the mid 70s down into the 60s. I think I had one person say they even dropped into the 50s. Um, we're going to talk about what's happened and what is happening. And I mean, basically, I would say if your ITM is dropping, one, it's a lack of market awareness, I guess you could call it. Ever since China, I've been saying it that our ranges, like right here is our range, have been kind of tight. This one is only a 12 pit range. This one actually lasted a little bit longer. We are seeing signs that the market's improving. But remember, I've been jumping up and down saying, look, you need to be careful because of the China thing. And as soon as China was cleared up, we moved into talks of the U.S. government shutting down. And plus, we're in end of month now. When we have that many world economic conditions, guys, you need to reduce your trades. And if you're consistently not, if the institutional levels are consistently not holding, it's better to just sit out and wait. You don't have to trade every day. If you force yourself to trade every day, you're, you're gonna lose. Just plain and simple. Last week I bitched. Remember what I told people? I took by the end of the week I only had 13 trades. Reason being, the market conditions were shit. With by then they hadn't really announced that yes, there will be no U.S. government shutdown, which now today they're saying there isn't going to be. They're going to pass a temporary budget fix today. So again, it's really important you keep an eye on, I guess you could say, world economic events. China plus getting cleared up, plus then a pending or looming U.S. shutdown. You need to be careful. We're going to take a look at some of the trades that one of the guys took. Or gals. Let's keep it in gender neutral so we don't see. Okay. Ugh. So the first one. Okay, so this is the chart. Now remember, guys, this is what I've been preaching. We had a warning candle right here. Why was this a warning candle? Because here was our previous swing high, swing low. What did that candle do? It closed below it. That's sign of a run south. As for levels on this, I only see one institutional level, so we did not have enough confluence there to jump into that. So you know who you are, but on this one, not enough confluence to get into that trade. You did have a good range right here, but remember I've said the ranges are very short, so it is a bitch. This would have been probably a little better, but it was still missing confluence. But this one was your warning candle. I would not have gotten into this, and if I would, it would have had to had 3 or 4 institutionals, 3 or 4 current market conditions, and it would still have only been a 1% trade due to the fact that this candle closed lower than the previous swing low, and that is a sign that it's going to run. So make sure you're paying attention to those. Let's take a look at the second trade that we had sent in. And again, guys, if you're new and you don't understand what the hell I'm saying, don't worry about it. Just ask. I mean, that's what we do the live chat for, so you can ask. Our next one. This one, let me get my little drawing tools up. Again, I would say this one didn't even follow rules. We're middle. We had the cog. Not overbought, oversold. Yeah, not following rules on this one. We're middle of market conditions, guys. Look, here's the hourly FIBO. So this is our 100 levels. The candle was pretty much in the middle of it. Our Bollinger Bands are right here and here. Middle of market conditions. We only had one institutional. This was a complete pass. I would not have taken this trade. Not overbought, oversold. It didn't meet any criteria to take a trade. So be patient and wait on them, guys. I mean, really. Just as a look, warning candle. Here's our swing high, swing low. Potential run down. We need to start paying attention to these a little bit more. I'm just pointing that one out. He didn't take a trade on it, but we need to be aware of those. Okay, third one we had sent in. And then we'll see if there's any good setups this morning, or we'll take a look at the charts and give our impressions on it. I do see you're using the trap indicator, which is good, because I see that it's a trap over here, so that's wonderful. Okay, again, this one, we had a little bit of a range, which is good. But, come on, let me draw. So this was the entry candle, it looks like, right here. Again, what do we have? And this one would be close to what I would call an ambiguous candle because it barely closed over these swing highs. I can see this was a very good support here. Did close slightly above it, but let's look at what you took. Were we overbought, oversold during that candle? No, it was like a 6. Did we have an institutional level? None that I can see. There's nothing in your institutionals here. Current market conditions, where are we? Hourly FIBO, you're in the middle of it. Bollinger Bands, we're right here. You were in the middle of market conditions and you had no institutional levels. Should not have been a trade there. So, for this person will know who they are. Focus back to basics, man. You're getting way, way off track. So far, 2 out of your 3 trades shouldn't even have been trades. You shouldn't even have touched them. Okay, and number 4, same thing again. Let's take a look. Put stronger. We're trending. Let's just draw this here. What do we have? So we have downward momentum. You can see it, downward momentum. Let's draw our swing, our support. It closed below it. You did at least have overbought, oversold this time. We had daily pivot, weekly pivot. Current market conditions. This time we finally stuck to rules, it looks like. This would have possibly been a 1% for me. Sorry, I was yawning. Okay, so the hourly FIBO was holding here. Let's look here. We had 0 to 100. It was about that big. 0 to 100. So the market really wasn't expanding or shrinking. It was holding steady on size because we compare the current FIBO swing to the hourly. And it was about holding right. It was Bollinger Bands here. So on this one, this is the first trade I'd say I might have taken. Reason being, and it looks like, I'm not sure how you lost. If you would have waited to the last 10 seconds, we're here, and then price did go up a little bit. There's 229 left on the candle. Maybe it dropped, I don't know, since we can't see the end result. This one, though, we did have the daily and weekly pivot. That's your strongest daily pivot and your strongest weekly pivot because there's no numbers on it. Like if we have up here DR1, that's daily resist 1. That's our first daily pivot. It's our second strongest. And then DR2 would be a little bit weaker, DR3 a little bit weaker, and so on and so on. This is the first one I agreed with. I'd probably go 1%, although the downward momentum would worry me. But if you took this one at 1%, I don't blame you. I honestly don't. We had daily FIBO 61.8, and we had 3 institutional levels. Current market conditions lined up. Everything lined up for a quick pullback. So out of the 3 out of your 4 trades, this is the only one I would have taken. So I hope that helps you out a little bit. 2 out of your 4 should not even have been touched. They did not meet rules. The first one I would not have taken because not enough confluence. So basically 3 out of 4 trades didn't meet rules. This was your only trade that met all the rules. So hopefully that'll help you out. I'm going to try and pop through charts real quick just to look at some, and then I'll stop the recording and we can just go into bullshit mode and ask questions. This was was it UJ? Yeah, this was the UJ one right here where I said don't get in. It looks like it dropped one more and then it's moved up. Again, see, it was hitting towards the round number, never hit it. Again, I would not have gotten into this trade. Not enough there. This is cable, GBP USD. What's the first thing we're looking for, guys? We're going to do a quick chart review. We're looking for a ranging market. Is this ranging? Not really. So on a scale of 1 to 10, I would give this a 2, and we'd move on. Euro, we have slightly downward momentum. We are getting a small range here. Remember, we've got 28 minutes to the US Open. Is it respecting levels? Let's see. It hit here, so we can see that it's respecting these 3 institutionals here a little bit. But what is it? Middle of market conditions. Remember, our hourly FIBO won't pop up for 3 more minutes. Middle of middle of conditions, so that's not a good place. It's in no man's land, I guess you want to call it. This one is AUD USD. A little small range, and this was what I was talking about after China, what we've been seeing. Typically a range will be 20 to 30 pips, and we've been getting a lot of this 12 pip bullshit. Markets were showing signs of expanding until we hit the end of the month. And remember, guys, end of month is a bitch to be trading. Hedge funds, things like that, major banks, they try and close out positions to boost their stats for the month. And let's see, we're heading into October, November, December. So this is also an end of a quarter. So just be aware of the end of the month. Like next month, the end of the month's not going to be too bad because it's going to be the beginning of a new quarter. But this is the end of a month and the end of a quarter, so we need to be careful of what we're looking at. Did levels get held? We haven't overbought, oversold right here. The Murray math held okay, but it's not enough confluence to take a trade. We only had one level, no current market, one current market condition, and a confirm. You could have possibly taken that because we had call stronger for 1%. So overall, AUD USD right now looks like our most promising chart. And again, market conditions right now are crap. We're end of month, end of quarter. We're in NFP and an FOMC week. So it's a be careful week. End of month always is shit, guys. Your performance you should go to turtle trading mode, like I say. Go to 1%, 3% trades. That's our only potential trade I see so far there. Oh, God. And USD JPY. I already said that one looks like crap. Again, though, it did have the small range here, but we did have our warning candle here. Remember, this was our warning candle that price was about to drop. Why was it our warning candle? Because we breached all the swing lows, and we closed lower than it. And it was a very good warning candle because it wasn't even overbought, oversold. So you should have known that that thing had plenty of room to drop. It was breaching range, breaching its swing high, swing low, and had room to drop. If scalping wise, let's talk about that real quick. That was a 14 pip run. I mean, that's a perfect run right there if you want to take a quick scalp. Alright, so that pretty much sums it up, guys. For all of you who are not doing as well as you normally do, guys, remember, world economic events will screw up the whole market. And I see a lot of you ignoring it. The people that have sent me charts, the one that we saw today, those were hideous. Like I said, 3 out of 4 trades I would not have touched. You shouldn't have touched them. They just didn't meet rules. So stick to the rules, and if you're not getting it... I mean, to sum this up, last week was shit, dude. I was getting fucking aggravated with these markets, and I like to think I'm a very patient person. I mean, I got a 6-year-old daughter running around the house. I was being tested by the markets last week. That's why I was focusing on scalping, because the markets were getting on my nerves. By the end of the week, I was ready to scream. 13 trades in a week for me. I have not seen that little or that small of an amount of trades. The volume of trades I haven't seen that in almost a year. That's summer condition bullshit that was hitting. So again, guys, be patient, wait for the setups, and follow your damn rules. 3 out of those 4 trades you should not have touched. But that sums it up, guys. I don't want to preach too much. Let's go ahead and I'm going to stop recording, and then we can jump over just to live and see what we see. So let me kill the recording.